morning, everyone. Welcome to our 13-minute video. Obviously, we do not have much time. So Jeffrey Dunham and Joe Strazzeri, it's all yours.
Good morning, everybody. Please make sure that your mic is muted. Good morning, Jeff.
Good morning, Joe. I'm excited to do this.
My volume is up.
12 minutes to go.
12 minutes. Taz, will you make sure everybody's muted for the fourth time? Thank you all very, very much. Jeff, I know that our office is getting slammed with calls. Is yours?
Yeah, everybody's sweating. What's going on? How can I protect myself from this losing the unified credit?
So in this 13-minute call, we're going to talk about the tax trap that's ahead of us. We're going to talk about how to have conversations with your wealthier or successful business owners and families and prospects. And why do you only have 8 weeks to act? Why only 8 weeks?
Yeah, so how can this help, Joe? What do you see on your side in your 5 minutes of this 13, and then I'm going to give 5 minutes?
Okay, sure. As I go by.
So Jeff, we were talking about we're getting all these phone calls. What do we do about the people that are calling in and say, okay, what now? I'm worried that, as I might call it, no matter if there's a Republican or a Democrat or some combination of President, Senate, and Congress and the state of California, it's a big problem. Well, I would suggest that you have the ability to take on that call as your client, whatever political persuasion they are, whatever they're feeling that the outcome of an election might be. I know that their fear is real. They have a real fear. Right now, there's an attack on the more affluent families, business owners, on income taxes. There's an attack on property taxes in California, and there's an attack that they're looking at for estate taxes. I know for sure in 5 more years, the amount that they can pass to the next generation is going to be radically cut. If not, by next year, it gets voted on and it becomes law by January 1st, retroactively January 1st to 2021. So how can I, as a practitioner, end up doing well with that? It's about being able to be that sage wisdom and look back and say, you know what, I completely understand. Most of my clients have the same concern that you do. Let's talk through that. And be able to logic through with your client the likelihood in their mind something would happen and the results of what would happen. So it is a fabulous way to attract those clients, and then their friends will call you too. First, you have to take care of the clients you already have. Then you're going to take care of the clients that have been trying to become your client that haven't yet, and then the rest. What options do they have to consider? Remember, we're dealing with a few different things. I'm not worried about asset protection changing by the end of the year. Right? I'm not worried about changing healthcare or control. I am worried about these taxes. Let's say the federal one. Are we going to have a different capital gains tax? Are we going to have a different estate tax? Are we going to have a different income tax after January 1st this year? And in the state of California, there are ballots to change my clients' property taxes on commercial property completely owned over $3 million, or if you own pieces of each, that all gets added up if you're the underlying beneficial owner. So our clients are now seeing that on the ballot. So how do we? It's a matter of saying, yes, you're right. It is happening. Let's discuss in your situation, if it doesn't change the reality, when it does change the reality, because it's going to change in 5 years for the estate tax. And is there still going to be an assault on you for property taxes and income taxes? So it helps us to know that there are things that the client is realizing that we've always wanted them to do, but they haven't yet done, that we can help with. I know that from my standpoint, here's a myriad of things that are financial planning goals for a client, that then they look at and they say, that's too much to look at, Jeff.
Yeah, that's overwhelming.
That's overwhelming. I can't do that all. What on here do I have to do? I'll deal with all the rest of it later. What do I have to do by the end of the year?
And that's the use or lose.
Yep. So use or lose things. I know in our case, there's a federal estate tax change coming in 5 years for sure, probably by the end of the year. So I need to do something about that. There's a California tax right now for my California residents or any other state that's too high and liable to be higher. So how do I solve for those things? On here are trusts or entities where you can shift wealth, and in 3 buckets. I have a bucket of assets that I'm going to use, that I'm going to draw down income for. I'm going to pay income tax. It's in my estate for estate taxes. There's a bucket of assets that I have that I might need one day, Jeff. Let's keep access to me. And there's a bucket of assets that I have that I'm a steward merely for another generation.
And let me share in the 6 minutes that we have left, three topics in 5 minutes. The 3 topics I want to cover, and for those of you who are listening, you may want to turn the video on because I'm going to demonstrate something for you that might be helpful to you. 3 topics: who's the right target, how this thing works, and what do you do when you find one? So on the who's the right target for what Joe was talking about, in my view, the right target is somebody that's got $15 million of net worth at least, and not probably more than 100. And the reason I say that, because below 15, they're worried that they're going to run out of money. Above 100, they likely have an army of people who have already pitched them on this topic. So 15 to $100 million net worth. Here's how it works, and here's how I've explained it. And clients go, aha, I get it. So I have 2 glasses before me. The glass here on the left contains all my stuff. It's a revocable living trust. You all have clients that have revocable living trusts. In it is your primary residence, your secondary residence, your LP, your LLC, your brokerage account, your bank account, all your stuff. And this is in your home state. This vessel that we're going to construct is a Nevada irrevocable trust. So this is a revocable trust. This is a Nevada irrevocable trust. I'm going to take some of this stuff and I'm going to pour it into the Nevada trust. So it doesn't matter that they're equal. It doesn't even matter at this point for this discussion what stuff we poured over here. But what I've created is 2 different taxpayers. And that's the key, ladies and gentlemen. That's the secret sauce. So you have moved, let's say 2 million or 5 million or 10 million, or maybe you used husband and wife exemption and you moved $23 million over into this vessel over here. Just like over in your revocable trust, the beneficiaries of this are your kids, your grandkids, your great-grandkids, and so on. Same is true over here. But this blue one, this second one I've poured, is the Nevada trust. And it is immortal. At least it's immortal for 365 years in Nevada. And because it's immortal and it goes down and flows to the beneficiaries, it pays no inheritance tax or estate tax for that 365 years. The beneficiaries, remember, are the same, and it's asset protected. So when I say it's asset protected, it's not just asset protected against the judgment or the lawsuit because somebody ran over somebody. It's also divorce protected, so that when your kid or your grandkid or your great-grandkid marry the wrong person, the assets in here don't go 50-50 when the divorce occurs. It also pays no income tax, no state income tax for that 365 years unless it distributes money. And the beneficiaries do have access to this under the circumstances that your client gets to write in that document. So some years they're going to take money out of it. Some years they're just going to let it grow. You can use it somewhat like a dimmer switch to distribute assets out when needed, retain assets when the distributions are not needed. So it gives you a lot of flexibility and the trustee a lot of flexibility in the future. The common name for this is a dynasty trust because it has dynastic features. And the whole key behind separating these 2 things is to create 2 different taxpayers. So by doing so, you're creating a vehicle to use up your estate tax exemption that you currently have before those laws change, whether it be in 5 years or in 15 weeks, and you create that separate taxpayer. So What do you do when you find one of these? When you find an opportunity, a prospect that has 15 or 100 million, you call us up and you say, Joe, you say, Jeff, you say, Ann at the trust company, I think I got one. And we're going to ask you, how do you know them? How do they know and see you? What do you know about their assets that they have in that revocable trust? What do you know about their life objectives and fears? Do you want to practice telling the story like we just did? You think you got it? Do you want to try it out on us? Or do you want us on that phone call to help you explain this to the client? I will share with you that this example has worked over and over again with the clients that we've come across. And I don't know about you, Joe, but I hope the audience has spent a valuable 13 minutes, and hopefully it will allow you to attract more 15 to $100 million clients in your book of business.
Very much so. So you've heard there are a lot of things to consider. Many of those things you can't get to by the end of the year. It's going to be afterwards. Those things that you can attack for are income taxes federal, income tax state, if it's too high, and a state tax is going to change as well. And there's a way to do that by simply creating another taxpayer. What features that Jeff talked about in there, whether you're reducing an income tax or reducing a state tax, a capital gain, a asset protection, is a mixture you can do in that other glass. And you don't have to do it with all, you're just doing it with some. Hope this is helpful. Enjoy the next 2 months. It's going to be busy as all get out. Your clients need your help because they're being given misinformation or a lack, and you can be that sage wisdom. Thank you guys very much. Thank you, Jeffrey.
Bye now.